Hello traders and welcome to another video review. Today is Thursday, March 23rd, 2023. Let's take a look what is going on the Forex calendar today. Yesterday's Fed interest rate decision was delivered, so pretty busy day yesterday, but today we got two interest rate decisions, or even three. First one comes from the Swiss National Bank. The interest rate decision for the first quarter is to possibly hike the interest rate from 1% to 1.5%. S&B monetary policy statement will be released as well, and the press conference will take place at 10 a.m. All day is Eurozone Leaders Summit. Next interest rate decision is scheduled for us at 12 p.m. and this is from Turkey, overnight borrowing rate. And then at 1 p.m. we have Bank of England interest rate decision, and market participants expect the Bank of England to hike from 4% to 4.25%. MPC meeting minutes will be released as well, together with the inflation letter. During the New York session, we have data from the in form of the building permits and new home sales, basically. So this is the home industry data, and of course initial jobless claims. Building permits 1 o'clock, initial jobless claims 1:30, new home sales 3 p.m. So again, pretty busy day. So let me just take a look at the Swiss franc today, Turkish lira, and of course the British pound. So let's start with the franc. Daily time frame chart of the euro versus the Swiss franc. What do we see here? Well, the first thing is that we got the technical resistance, which is quite obvious technical resistance, located at the parity level, roughly 1.0097. Since there we got some kind of a decrease in price towards the technical support located at 9,713 pips. So this area here that has been played since the November last year, and nothing changed since then. So we got this zone on the euro to the Swiss franc. Right now we are ripping higher, because if there is a situation when the Swiss franc will be, if the Swiss National Bank will hike the interest rate of the Swiss franc, it will still be not that big hike, and the overall rate will not be as big as the current euro hike, which is why the traders are still prefer to buy euro while it is still cheaper, anticipating then the in the future European Central Bank will hike the rates again, which is why this market bounced from 9,713, I guess, in 13 level, and we are back above the 150 days moving average, and we are approaching the local high at the 1.0040, but the general outlook for the euro to the Swiss franc is very bullish. Okay, so in that situation that we have currently with the Swiss National Bank and the European Central Bank, which is apparently the situation about the a race of interest rate hikes, the market participants still prefer to buy euro and sell the Swiss franc, while this interest rate hikes are not that high yet. Okay, so that's the situation on the euro to the Swiss franc. Let's take a look at the Turkish lira. This is the let's say a weekly. Let's take a look at weekly, because on daily you can't see much. This is a weekly chart of the Turkish lira. Interest rate hike, of course, this is the central bank intervention, and the Turkish lira, as you can see, keeps moving up slowly but steadily, keeps moving up month by month, week by week, day by day. We are getting closer to the level of 20. Right now it's 1904. In a case of another interest rate hike, we should see spike to the upside. So that's the weekly. How it looks on the 4-hour chart. You see, that's the situation. Even if we, there you go, even if we zoom out, we are perfectly balanced just above the 50 and 100 periods moving average. Up, 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 up. Every spike down is being bought. Up, 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 up. So this is a very nice uptrend. It doesn't look that liquid, okay, because this is a completely different market than the euro dollar, of course. So it looks differently. Nevertheless, even the beginner trader can spot an uptrend here, confirmed by the moving averages. Let me just add, because I was wondering if we can add another moving average, because I think this will be SMA, simple moving average, and let me just change this to 200. 200 days, 200 periods right now. Okay, so the light blue is 200 periods. As you can see, again, somewhere there is still a price that is touching this level as well, and it's being bought back up immediately. How does it look on the daily? Yeah, we are definitely trading above the 200 periods moving average on the daily. There is no doubt about it. So the outlook, if the rate hike will materialize, so there will be another increase, then of course spike up is being expected. And the star of today, the British pound. What do we have here on the British pound? Well, the situation with the British pound is very, very interesting, because what we are doing right now on the daily, we are approaching this level. Okay, this is the technical resistance. This is the technical resistance located just at the level of 1.2447, around there. And during the last week and the week before, we got very nice bounce from the lows at 1.18 roughly. Okay, so that's the daily time frame chart. On a 4-hour time time frame chart, let me just remove the 200 periods moving average. As you can see, we are keep moving higher, bounce, 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 and the momentum remains on the elevated levels. So market participants are expecting another hike, of course, and the reaction for this hike might be quite bullish. The target is, of course, our red line, which is the technical resistance. There is no doubt about it, but in case of a very high volatility, this level might be violated. So to which level this up move is valid? I guess that as long as we trade above this level, 1.2202, the uptrend is intact. And of course, the line in the sand for bulls is 1.20. This low from the 15th of the March 2023 is the line in the sand in the short term for bulls. If this is violated, then we can assume that the uptrend is done, and now we should we should continue the down move for quite some time. Right now, this, as you can see, this low was made on the 8th of the March. Today is 22nd, so it's already 2 weeks. Okay, so if we break below this level, 1.20, sorry, then we should expect another like a week or two down movement on the British pound. However, volatility is not that big. The market participants await the interest rate decision, await the especially inflation report, and of course the comments and the statement from the Bank of England and the future plans related to the monetary policy. So please keep an eye on the current situation today. We have 3 rate hikes. All of them are important, of course, but the biggest volatility might cause the unexpected rate hike or cut. That's even more unexpected in this situation. Rate hike bigger than the market expectations. So it will be very, very interesting how the market will react on the interest rates decision today, and what the actual rate will be for today. Okay, so let's stay focused, let's stay vigilant today, and we will see tomorrow, of course, what was the market reaction and what can we do with the situation on the charts. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Take care and bye bye.